Hi, accounting students. This is the guided practice video for sales taxes. We're going to do two sets of examples, one set of three for HST payable. I'm going to walk you through two examples and then ask you to complete the third. And then we're going to do the same thing for HST recoverable. I'm going to give you two examples and then ask you to do the third one. You can then submit the completed document to the appropriate Dropbox. So we're going to start off with baby steps and just look at a basic transaction and then add in the taxes for the second to see kind of how it's different. So in this case, we are the accountant for LP Sports Store, and we have sold a pair of shoes for $50. And so now our task then is to give the journal entry to record this transaction. We'll assume that cash was paid. So we have the year 2015, so we're going to add that in. We have the month of May 27th, so we're going to type that in. And hopefully we know or can remember that we have received cash for this pair of shoes, so we're going to debit our bank account. And then since we have increased our sales, we're going to credit our sales account. So do bank, tab over, and we have $50 there. And we're going to go back to our next one, type in our sales account, which should be indented 1, 2, 3, 4, 5. Sales for $500 or $50 rather. And we just need our explanation. There we go. Sold one pair of shoes. So pretty straightforward, nothing too exciting. So in the next one now, we are adding in the element of HST. So this is HST that we are collecting from our customer that we're going to have to pay in the future to the government. So we're going to be using, as the document says at the top, our HST payable account. The question is where and how. So let's have a look at this. So on May 28th, we sold this same pair of shoes for $50, but in this case, we have HST of 13%. If you do the math, that 13% equates to $6.50. So we're going to put in our date, so 2015, our month, and the day, which is the 28th. So in this case, we have collected $50 in cash for the shoes plus $6.50 in cash for the taxes. So the full entry to our bank account in this case is going to be $56.50. Now, as we should recall, we don't get to keep all of that $56.50. That's just the amount of money that we receive from our customer. We have to register or process that as the entry to the bank account. The next thing we're going to do is, of course, we still have our sales account, but we should remember that out of $56.50, we only get to keep or claim $50 as our sales. Oh my goodness, having lots of fun here. Oh, there we go. So, as we should see, we are not in balance. We have a debit of $56.50 and a credit of $50. So mathematically, we should know that we are going to need a credit of $6.50. But as we talked about before, the HST payable account is like a liability. So since we owe more now than we used to, we should really truly understand the process, which is that since our liability has gone up, we need a credit for that. So I'm going to indent my sales as well. There we go. So I have a total entry for bank for all the amount of money that I received for $56.50. Then I have the actual sale of $50 that I can claim, and then a credit of HST payable, which I'm going to have to pay to the government in the future, right? So we should see here then that we have the same basic structure of the transaction. We have a debit to a bank, or it could also be an account recoverable, or receivable rather, if it was on credit, and an entry to sales. The difference is we're going to have an additional credit, so a second credit, this time for the HST payable. And then the entry to the bank or to the account receivable would be for the full amount of the sale. So now your task then is to do exactly the same thing for the sale of a tracksuit. So the basic cost of the tracksuit is $200. You need to calculate 13% HST and then create a journal entry that looks something like this. Obviously the numbers are going to be different and the date, but that should be about it. I'll wait while you do that. Just kidding. You can pause the video now and do that or wait until the end. So now I'm going to move on to doing the HST recoverable examples. So we're going to do the same basic process where we're going to start with a simple transaction without taxes and then introduce how the taxes change the transaction. So in this case, again, we have, so 2015 is May, and this is on the 29th. So in this case, we have purchased from our vendor $1,300 worth of supplies from a company called Business Source on account. We are going to record the journal entries for the sports store, assuming that there are no taxes. So our office supplies account has gone up, and we now owe Business Source more than we used to, so we've got an account payable. So we got that listed. Now we're going to make sure that we indent it properly. 1, 2, 3, 4, 5. The full amount of the debit is going to be for office supplies. The full value of the office supplies is $1,300, and the amount of the money we owe to Business Source is now also $1,300. And we just need a quick explanation. Good. So, and once again, pretty straightforward. We have an increase in our supplies and assets, so that's a debit. We have an increase in our liability, so that's our credit, and we are balanced, and we have our explanation, so we're good to go. So now we have the exact same transaction, except that this time we have 13% HST, which we are paying to our supplier, but we will be able to recover back from the government at a later date. So we have everything else is the same kind of little change on it. Actually, the data is the same too. Now, if we do the math on this, the 13% of $1,300 is $169. So we need to kind of factor that in, right? So going back here then, the office supplies, the value of the office supplies hasn't changed. We still only received $1,300, even though we paid $1,469, so $1,300 plus $169. We only received $1,300 worth of office supplies, so we have to list it that way. We talked about how we have now an HST recoverable account, which we need to factor in, and we also have our accounts payable account. So as we did above, we should know that this is going to be a credit. So I'm going to indent this 1, 2, 3, 4, 5. So then the question is, how much money did we actually pay to Business Source? Well, we paid the $1,300 plus the taxes. So the actual amount of money we paid them is $1,469. So the issue then is, what are we going to do with this HST recoverable? How much is it, and is it a debit or a credit? Well, we calculated in a previous step that we have to pay $169. So we know that that is the value of that. And if we look at our office supplies entry is only $1,300, and the credit for Business Source is $1,469, then we should know that we need more debit. But the other way to look at it, the better way to look at it, is that since we have HST recoverable, this is a account receivable, money we're going to receive in the future, the government technically now owes us $169 more than they used to. This means that it is an asset and it's increasing. Therefore, it would be a debit. So we're going to put our 169 there. And then noticing also, because this is a debit account, that it is left justified over here with my office supplies. So I have an increase in this asset of office supplies. I have an increase in this asset of HST recoverable. Then we have an increase in our liability of accounts payable. And then just to finish off, we need our explanation. So then the last step then is for you to look at this last transaction where we have a bill that we've paid to ServiceMaster for $500 for the monthly cleaning expense. So I've given you a little hint there. It's an expense account, and so we have and it's an account payable, or sorry, it's an invoice that we're paying. So we've got the full amount plus the HST. So I need to see the line items that you would put in order to pay that bill. Good luck, and once you're done, like I said, please submit it to the correct Dropbox.